Time now for On the Radar, when we ask an investing professional what they're looking at in today's markets. We are back with Colin Stewart. He's our featured guest of the morning. He's also CEO and portfolio manager at JC Clark. And we're going to talk now about tax loss selling, which has the effect of pushing down. It can accelerate declines or further the declines on stocks that have already lost ground. That's because clients are selling them to book losses. You think there's some opportunities here in some Canadian stocks that have declined lately?
Yeah, exactly, Paul. I mean, I think in a year where you have large gains across different asset classes, many investors have capital gains, and particularly in Canada with the inclusion rate potentially going up, people are looking for ways to reduce the potential tax bill, and one of those is to sell stocks that are down in the year where they've lost money. And so, we're always looking for opportunities where non-fundamental factors are temporarily impacting a share price, and I think that's exactly what we see during tax loss selling season. Usually that sort of starts maybe late October through November into mid-December. And stocks that are down come under additional pressure just for tax reasons, nothing to do with the fundamentals of the business. And then, the data when we've looked back over time in Canada suggests that sort of from mid-December through to into mid-late January, those stocks tend to recover because the tax loss selling is done, and people say, well, right, these are good businesses. It went down 5 or 10% for no particular reason other than someone wanting to book a tax loss. Okay,
so let's jump into some names. One that we get a lot of calls about on Market Call is Superior Plus, the propane distribution company.
Yeah, exactly. It's a company we're interested in even beyond the tax loss selling, because I think the stock has been beaten up. They had a large dividend cut. It was very heavily retail owned, so I think a lot of people selling that to book a loss. But a new management team has come in the last year and a half. They're really revamping the business, focusing on fixing the things that were wrong, not acquiring as aggressively. They cut their dividend. They're using that $135 million that they're saving to buy back stock fairly aggressively, which we think is the right thing to do. And ultimately, it's a pretty steady business, a lot of free cash flow, and the valuation is very, very depressed relative to where it is and where other propane type distribution businesses trade.
Down 36% over the past year, and it got significantly cheaper yesterday in itself. Another one we get all kinds of calls about, probably more than Superior Plus these days. BCE, the big telco company, of course, it's the parent of this television channel. It's down substantially this year.
Yeah, I mean, all the telco stocks have been weak. Concerns over wireless competition, and maybe it's not a regulatory environment as we've had in the past in Canada. But I mean, I think when we step back and look, ultimately, this is an oligopoly type business in Canada. It's the long-term fundamentals are pretty sound, high barriers to entry. The dividend on BCE is now, I think, as of yesterday, maybe 11.7, 11.8%. I know the market didn't love the acquisition that the company made in the U.S. A month or two ago, so I think that's also weighed on the stock. But there's no doubt this is such a widely held name in Canada. We are seeing tax loss selling here push this down more. So I think, again, it's an opportunity to perhaps acquire an initial position, and that's what we've done in the last couple of weeks.
Okay, we've got about 30 seconds left for Premium Brands, ticker symbol PBH.
Yeah, again, really high quality specialty food distribution business, been a great grower, compounder over time. It's come under some pressure recently. They've been spending a lot of money in capital to build some new plants in the U.S. It's down on the year. People have been selling it, but valuation's at a decade low. Really good management team, and we think the next couple of years are going to look a lot better. So we've started again to use this opportunity around tax loss selling to build an initial new position.